So yeah, welcome everyone. I think today has been quite an interesting day for a numerous amount of pairs, especially gold. So what I'm going to do is focus on gold, and I think maybe potentially some people today may have got stopped out in a couple of gold trades if you're trading through the day. And normally this is to do with news, and I'm going to show you which part of the news happened today. But overall, just like Trading Nick said, overall we are very bullish. The one thing that was a bit scaring me today was that the last daily candle, so this one here, did not close above this daily resistance. So can you see this daily resistance here? We did not close above. And for me, that was a bit of a warning sign for buys because of the fact that if we did close above, so for example, something like this on the last daily candle, 1 second, something above this area, we've got clean candles to the left to drive all the way back up. And unfortunately, we didn't do that yesterday. So I was always a bit cautious on buys. However, what you saw today was we had a bit of a correction through the end of yesterday and into Asian sessions. And where did we come to? Well, we came to 1931, which if you can see on the 30-minute time frame and the 50-minute time frame, we were ranging here pretty bad, okay? And a lot of my students over here were waiting for closures below, which you can see to the left-hand side, we did not get. This candle came close, and we did drop down, but we did not get any closures below. And you can see over here, we retraced all the way back up, and this is to pre-NY. And pre-NY bought a lot of volume. And you can see over here, I had a no trading range. And what I mean by a no trading range in this area is that look at the candles. Look at the way price is moving. If you're trading intraday, sorry, not intraday, if you're trading daily in like a couple of hours, if you're trading in this area, look how many times price moves up. It's just in a range, and it will mean that trades are so much harder to take. So for me, what I was waiting for was a closure above or below, okay? And you can see over here, price at 11 o'clock my time started coming up. If you take a look at the 30-minute time frame, we got a closure above this big candle over here, 1938. So then when this candle closed over here, we were like, okay, all we need to do now is make a lower wick, retesting the previous zones. And if we get a flip over here, we're going to continue bullish. So a lot of streamers, a lot of traders over here took this trade. And I actually got in on the 5-minute time frame. A lot of my students, shout out to Jason, look at the 5-minute time frames, because this is when support is held very nicely. You can see over here to the left-hand side, this was the key level that we've closed above. So now I wanted price to, it made the high in the 30 minutes. And what I wanted to do was price to retrace back to our certain level, 1937, and to take buys to continue. Now, when this candle opened, 1 second, this 30-minute candle here, when it opened, if you actually look back at it, it had no top wick. So what happened was the candle looked like this. Okay, 1 second. Just like this. Okay, there was no top wick. So what does this mean in the way that we trade? Well, look at all of the candles everywhere. There's always a top wick and there's always a bottom wick, pretty much 85-90% of the time. So if you know that we're making a lower wick over here, the probability that you come up and at least flip this top wick over here to make the top wick, or something like this, 1 second, like what it's doing there, is very high. So what I'm doing is looking at the lower time frames to try and get a nicer entry at support where I can have my stop loss below in the previous zone, which was
I was
here.
just about to ask you. So when you look at that spot that you just marked,
Mhm.
you're talking about lower time frame, narrowing it down to the 5-minute chart. You're
Yeah.
pulling back to a level of structure there. How do you manage the stop loss there? Because obviously, if it were to completely be a fake out, you probably
Yeah.
want to look to get out.
Yeah.
Stop loss. What about target placement? What's your
Yeah.
thought process there?
Exactly. So the thing is with gold and the way that I enter is for managing risk, because we've got such smaller stops, it's kind of hard on the gold time frame unless a 50-minute close bearish below. Normally I like being in and out very quickly. And in this trade we did. So actually when we got in, it was on the 5-minute time frame and it was about here. So right at this level, when this 5-minute closed bullish above, holding that support, I was like, right, as long as my stop loss is below this area, I'm going to have a really good risk to reward, because what's going to happen over here is going to 14 pip stop. And what do we always know when price, holds a level of support? Well, it's going to come up to the highs, isn't it? So for me, what I was doing was I was targeting the highs at this body of the candle mainly. So when price came up to around about 20 pips profit, 22 pips profit, I closed 80% of my position. I actually put stop loss to break even about 12-13 pips here, made it a risk-free trade, and then closed 80% at 20 pips. So for me, if I risked 1% per trade on the trade there with a 15 pip stop and then got to 20-25 pips, I'm making quite a good gain. And this is in 2 5-minute candles. And this, if you look on the 30-minute time frame, was just us flipping up and exceeding. So I actually closed right at the flip, which was good. A lot of traders, though, actually got in a bit later on when this candle closed bullish. and waited for the lower wick. Now, the only issue with this trade now was when news came out. So if you take a look at Forex Factory and you go to news, we had an article come out. Where about was it? 1 second. There we go. Fed. Was it this one? Yeah. Fed's Walker. So about liquidity, etc., which made gold kind of reject pretty hard. And all you got to know is you can't do anything about that. So I know a lot of traders who are really, really good got stepped out over here on the 15-minute time frame coming back.
Let me
down.
ask you one more question, if you don't mind. I gotta, so because this, I love this. This is excellent. So you've isolated an idea on the chart, a support zone that you're talking about. Price pulls back. You're looking just for a return back to the highs. You pull back, you pull off 80% when it returns to the highs. That's definitely, there's all different ways to trade the markets, of course. So you're looking, what it seems like, for relatively, you're looking for the good risk reward, but you're looking to pretty much quickly pull off most of the trade if it goes in your direction in terms of, back to significant resistance. And then one more question, you've got that daily flip level marked up there. What was holding you from, you took that trade, you had the stop loss pretty tight, you took off 80%. Were you waiting to take the rest off at that point? And perhaps why did it never make it to that point?
Beautiful. Yeah. So the reason why I closed 80% is because at this point, right, price was looking like this. So price was coming above this level. Price, I was actually looking like this. And if you can take a look to the hourly time frame when we're up at this level, right, what you can see over here is the next hourly resistance has got to be up here, right? This is the next hourly resistance, which makes sense because before we had resistance there in these areas and we had resistance there. So this has got to be your next target. So for me, what I was potentially doing was running that 20% of my position to the highs, which would have given me an extra, let's take a look over here, an extra 43 pips, which is pretty decent, especially with my stop was only 13. And what we always say over here is that if the daily flips, okay, if this daily candle flipped, we got good potential to at least fill the previous wick. So, unfortunately, that did not occur. But yeah, the main kind of situation for me is that the daily looked like it was going to flip. And then the only unfortunate thing was the news that was coming out. So for me, if I had this trade on and I showed you it, so I got in here, my stop loss is below. And the reason why I like to stop is because it's in the previous zone. So it's in a very, very good space for trading because the stops are so far down. And when it came back up over here, obviously you got stop loss to break even. And my next TP would have been at this high, the daily flip, because that's a really, really good place to take positions off and to finish the whole move. And why is this? Well, look to the left-hand side, a clean candle. So normally when clean candles are to the left, that's when price moves nicely. Can you see? Oh, it happened here. It happened here. This means that price in that area moves very, very quickly. Now, if I could put my money on this, if there was no news, that would have went easily to 1942. But unfortunately, the news came out and you can't do anything about that. So if you did take a trade here and lost it, don't be butthurt about it. Don't be upset about it. It's because of the news. These things happen. You can't be annoyed with yourself about this. And you can see when the news came down, we came all the way back down to 1931, which is the clear support that it's holding. And they'll probably stay in, until Monday at that support. But yeah, that was the gold trade I wanted to go through today. But the overall trend on gold is still bullish. However, if this candle does close bearish over here, respecting this resistance, what I got to wait for really good buys is above this area, so 1948, to continue bullish for sure.
I like that too. I was actually mentioning on my stream prior to this, we were talking about gold. I trade. We have, like we mentioned earlier, there's many different ways to chop up the market and trade it. I'm more of a fundamental trader, and then I mix the technicals in to kind of help me with entries and exits. I was talking about how fundamentally and kind of what you're seeing on the daily chart, technically as well, there is some bullish structure overall, but recently there's just been some very, very strong sell pressure in the market. So I kind of was with you on that in the sense that I'd like to see that fade. I'd like to see some signs of bullishness return back into this market before I try and trade on the long side aggressively. So it's fundamentally, for me, it's bullish until the situation with Russia and Ukraine kind of subsides. But then technically I'm looking for signs of bullishness. So you just touched on something there. One thing going forward I'd like to ask you about is when you're looking at the gold chart, what would get you to say, you've got buys above 1937 on your screen. What would kind of flip the script bullish for you in terms of an intraday or lower time frame thing? What are you looking for before looking for buys? Because you just said higher time frame or bullish. What are you thinking there?
Yeah. Wait, what should you mean? Do you mean where should I get in a bit lower to swing a bit? Give me a
Well, no, so like not necessarily swing, but like let's say we're talking intraday
yeah.
and you said, higher time frame, we do still have some bullish structure in
Mhm.
there. What would kind of be a signal or a trigger for you intraday to start looking to take buys again?
Yeah, I mean, for sure, as I said, it definitely is above this 4-hour level, 1944, 1945. If you take a look, if I just put a line over here where this is, where this big resistance line is, okay, let's just make this, I'll make this a different color, make this a white line, okay, and we go back to it over here. Oh, 1 second, there we go. And take a look on the daily time frame, you can see it's literally over that level. So for me, intraday would be when we could either get a nice 4-hour closure above. I think 4-hour would be reasonable because when you get a 4-hour closure, just like this one did over here, can you see? A 4-hour close below, wait for the lower wick. If this exceeds the high there, you're pretty good. So intraday, I mean, I would happily take a trade like that in the 4-hour time frame, maybe stops below. So that's like 100 pips. Maybe here's like 76. I think that would be pretty reasonable if we came back above those levels. And like
Sure.
as I said again, the return when you're above this level is going to be massive because the body, the candles are so big. Um, because of how much it moves in that area. It's just where price doesn't like to settle. You can see literally from 1945, came all the way up to 2000. And that makes sense. Psychological level 2000, that makes perfect sense. So for sure, I mean, if you're getting into intraday buys above 1947, 1945, I mean, up to 2000, that's a good risk to reward, isn't it? I mean, if you can risk like 70, 80 pips for a 500 pip gain,
Oh,
that
absolutely.
is not too bad for sure.
It's a good spot to be in for sure.
Let's face it, if you're trading Forex without a winning trading plan, you're gambling. You need a model that is going to long-term net you a profit. Our team has put together a free guide on how you can actually create a trading plan.
All you have to do is use the link down below in the description.
Send the word template to our team on Telegram and we'll send you a copy. Again, hit the word template in your Telegram, send us a message and we'll get back to you with a copy of the free trading plan template.